All those groups, Vanguard, Merrill, Bank of America, are very tightly aligned with Ms. Warren. If you look at Ms. Warren's biggest contributors, guess
Mhm.
who they are?
Mhm.
I want to live permissionless. And I'm tired of having the bank have to give me permission to get my money, or a brokerage firm give me permission to take my securities and transact with you. In a permissionless world, banks, brokerage, insurance companies, auditors, accountants, they're less important. And that's why this is so feared.
Mark Yusko, founder and CEO of Morgan Creek Capital, has persistently cautioned about a significant conspiracy impeding the advancement of the cryptocurrency sector in the United States. While some investors may dismiss his warnings as mere conspiracy theories, recent events have shed light on the depth of this conspiracy. The launch of spot Bitcoin ETFs earlier this month was met with initial success, boasting nearly $5 billion in transaction volume on its first day of trading. However, major asset managers such as Vanguard swiftly announced their refusal to provide access to these new products on their platforms. Reports indicate that financial giants like Citigroup, Merrill Lynch, State Street Corp., UBS Group AG, and Edward Jones either outright denied client access to the ETFs, restricted trading to select customers, or opted to evaluate the situation further before making a decision. Vanguard, the leading detractor, cited a misalignment with its investment focus on traditional asset classes such as equities, bonds, and cash, which it considers the cornerstone of a well-balanced long-term investment portfolio. In a statement released on social media, Vanguard declared that spot Bitcoin ETFs would not be available for purchase on their platform and that they had no intentions of offering such products in the future. In a recent interview with Thinking Crypto, Mark Yusko elaborated on the entrenched connections between traditional financial players and crypto-opposing figures like Senator Elizabeth Warren and SEC Chair Gary Gensler. He characterized this as a struggle of the old guard against the burgeoning new industry. However, he pointed out that in this case, the old guard represents an 800-year-old industry that siphons trillions of dollars from the global economy annually.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
What does Jamie Dimon do? He runs the largest bank in the world. Well, second largest. Bank of International Settlements is bigger, but he runs one of the largest banks in the world. It's a really powerful guy. So wait a minute. What does blockchain technology do? It does to financial services what the internet did to media and commerce.
Mhm.
Right? Amazon exists because of the internet. And mom and pop shops, a lot of them went out of business because you can buy it from Amazon. Same thing's going to happen to finance. So he runs a financial services firm that is threatened by this new technology, Bitcoin being one manifestation of it. And so, yeah, he's nervous.
Yeah.
My other view is you can always judge the quality of an idea by the quality of its detractors.
Mhm.
Right? If you have an idea and no one who's important or meaningful hates it, it's probably not really that big an idea. If you have an idea and people who have power and influence don't like it, you're onto something. And you can
Mhm.
go back in history, we just had Martin Luther King Day, right? He had some detractors in really high places and probably
Mhm.
ended up, costing him his life for that, right? For taking
Wow.
a stand for human rights and civil rights. But if nobody cared about that, then it wouldn't have been a big idea. But it was a really big idea.
Mhm.
I want to live permissionless. And I'm tired of having the bank have to give me permission to get my money, or a brokerage firm give me permission to take my securities and transact with you. In a permissionless world, banks, brokerage, insurance companies, auditors, accountants, they're less important. And that's why this is so feared. But just like every innovation, right? The internet was feared, air travel was feared, the
Automobile.
radio was
Mhm.
feared, television was feared, electricity was feared. There are these great pictures from the 1900s,
Oh yeah.
electric wires and these demons coming out like it was going to ruin the world and it was going to poison everybody. No, electricity is awesome. It makes my life so good. It makes what we're doing possible. And blockchain is the same thing. Bitcoin is the same thing. So it's big. It's here to stay. And here's the thing. There's 30 trillion in boomer accounts managed by financial advisors. It's a lot, 30 trillion. If 10 basis points goes into these ETFs, okay, that's $30 billion on an asset that trades about $10 billion a day. That'll move the price a lot. If 1%, which is not even crazy, 1% should be like the minimum you should put in. I'd argue 2, 3, 5, 8, 10, but 1 is the minimum. That's 300 billion on an asset with a current market cap of around 900 billion. So we're talking about a really, really big growing demand. And what people forget, when GBTC launched, they raised about $10-ish billion of new fiat that went into GBTC. And the price of Bitcoin went from about 10,000 to 59,000 in a matter of months. I mean, it was a total parabola. And yes, then it crashed down to 30, and then it went back to 69, and then it crashed all the way down to 15. And today, we're closer to 69 than we are 15. So that, I think, history is going to rhyme. And so as that parabola, as that FOMO picks up later this year, post the halving, and we get into what's called crypto fall, which is when all of the activity and the media attention, and I think we could go very, very quickly from where we are today to 6-digit Bitcoin. I mean, like faster than people can imagine.
According to the esteemed hedge fund manager, Mark anticipates another surge in Bitcoin and other cryptocurrencies, marking a parabolic cycle. He asserts that we are currently in a phase he calls crypto summer, which commenced around June 2023, coinciding with BlackRock's application for a spot Bitcoin ETF. However, Mark opines that the true parabolic movements are yet to materialize and will likely occur during what he terms crypto fall, expected to start around June 2024 and extend into mid to late 2025. During this period, Mark forecasts that Bitcoin prices will soar, potentially reaching 6 figures, escalating from $42,000 to a minimum of $150,000 per coin. Additionally, he speculates that Bitcoin could surpass $150,000 and climb to around $250,000, particularly if more institutional investors invest in the ETFs. Presently, there are ongoing closed-door meetings and marketing efforts, which are expected to yield results in the forthcoming weeks. Returning to Mark's interview, he discusses Vanguard, Merrill Lynch, and other entities that have declined to provide access to Bitcoin ETFs.
What they're saying is, all you young people, all you millennials, Zoomers, we don't give a shit. We got the boomers, and the boomers don't want this. They want us to be the buttoned up Wall Street types to say, no, this is bad. That's fair. That is a calculated decision, I will argue, made by boomers, because boomers are the ones running the firm, that has a limited lifespan.
Right.
Because here's the thing. All of us, every single one of us is going to die.
Yep.
Every single one of us. I mean, everyone eventually, but the boomers first. And we're all going to die. And all that money that we think we have is going to y'all. It's going to the Zoomers and the millennials. And so if Vanguard and Merrill Lynch and Bank of America and UBS piss off those people, what's going to happen? They're just going to leave. So their mom or dad, their grandpa or aunt is going to bequeath them the money, and they're going to take it out. And I actually see this. I have a Family Harmony account at UBS. My brother-in-law is a financial advisor. And he took over his dad's book. And all his dad's clients are passing on, right? They're 80s and 90s and some even 100. And the kids come and they take all the money out. He gets about 10% that stay. 90% just leave. And now, by fanning the flames of this digital divide, I just think it's a bad idea. I mean,
Mhm.
29% of millennials own Bitcoin, 4% of boomers. Okay. So with the ETFs, that 4 is going to go to 40, my number, picked out of the air, like 85% of statistics made up on the spot. So, and that 29 eventually is going to be 100. I mean, I say this all the time. Use a prop. I have 3 grandkids, 1, 3, and 5. My youngest is a Gen A. Actually, I think all 3 are actually Gen A, but I always talk about my youngest because she's 1. She'll never have one of these. She will never have a leather wallet.
Mm.
In her whole life, she will not know what paper money is.
Right.
Not ever. And so she will grow up using digital assets. She will grow up exchanging digital assets, stable coins and Bitcoin and whatever. That's a different world.
Absolutely.
And so, yeah, you can cling to this big nest egg that you've created for yourself at Vanguard and others. But I just think it's a bad decision, because no matter how much you don't want the future to happen, if you're an incumbent, it's going to happen. You know, in biology, there are 2 states, only 2, growth and death.
Mm.
You're either growing or you're dying. And I prefer this one. And if I were in charge of these big firms, which I'm not, I would be embracing. Now people say, but if you embrace the new, then you're going to piss off the old and they're all going to leave.
In recent developments, Eric Balcones, a senior ETF analyst at Bloomberg, suggests that another massive financial entity is poised to enter the Bitcoin ETF arena. According to Eric, Charles Schwab, an $8.5 trillion financial behemoth, might be strategically assessing the benefits of being a latecomer, such as introducing competitive pricing and low fees. He hinted in an interview that they could potentially offer a product with fees as low as 10 basis points within a few months, which could be groundbreaking. In a subsequent post on X, Eric emphasized the significance of Charles Schwab's potential entry, highlighting their track record of making significant impacts despite not being the first mover in various markets. With a vast customer base of 30 million active brokerage accounts, Charles Schwab's potential interest in the Bitcoin ETF space could be catalyzed by the success of competitors like Fidelity. It appears that more intriguing developments lie ahead for Bitcoin and the broader cryptocurrency market in the upcoming weeks and months. Feel free to share your thoughts on Eric's insights and predictions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.